Let me talk to you right quick about the Feds dropping the rates in 2024. It's a good thing for the mortgage industry, and I am in the mortgage industry. So, yes, it's a good thing. However, I'm going to give you some tips and I'm going to tell you some truth. Now, here it is. We at 6 point something with the interest rates for mortgages. Now, most people are saying, I'm so glad I waited to buy my house. I knew the interest rates was going to drop back to the 2.99 and all of that. Technically, we don't know how much of a cut. They said 3 cuts, but at what percent are they going to cut? We don't know. But anyway, it's still a good thing that they're going to cut the rates. But here's the thing. And when the rates was 2.99%, think about this. People were selling their houses at twice and 3 times the value, the amount. Because see, this how it go. You all thinking you doing something smart and not speaking to a mortgage expert or a realtor and seeking advice from them, and then you get advice from yourself or Google or whatever. And it's really not like what it cracks up to be or what you assume it to be. Because here's the thing. Right now, rates are at 6 point whatever percent. This is the perfect time for you to buy a house, a couple of houses. And the reason why I say that is because you could buy a house today at 6 point whatever percent and say the house is going to be at 360,000. However, next year in 2024, when the rates drop back low, that $360,000 house is going to go twice in value. So while you happy that you're getting a lower interest rate, you are paying twice the amount for the house. So make it make sense. 6% now, buy a house cheaper and refinance in a year for that 4% or 5%, whatever the rates end up being for 2024. There is your savings. You save what, a couple of $100,000 on a house that is gonna cost you twice and in some area 3 times the amount. See, they forget about it's not inflation or anything like that. The housing, the sellers become smart and they know like, hey, once the rates drop, people are going to be looking to buy homes and the market is not going to be flooded with a lot of homes like people think. So the sellers take advantage of that and say, hey, I'm going to sell my house for twice the amount and then go buy me a house later. Or they go buy them a house now and then sell later. Sell in 2024 for twice the amount. Now, don't get me wrong. I'm in the industry. I want you to buy a house. I want you to buy a house at lower interest rates. But this is the advice that I, as an expert of many years, will give you. Don't just buy a single family residence right now. With a low interest rate, go buy you a multi-family or a mixed use. If your credit is not like way up there and you got at least 620 to 680, go get a FHA multi-family home loan. You still gonna put down 3 or 3.5%. which is good. However, FHA allows you to take the other units in the building to use that as income. So, say for instance, you're a gig worker or whatever the case may be, and you have a certain amount of income and your income don't qualify for the multifamily unit. However, you got a 4 unit with FHA, you have to live in one as your primary for a year. It has to be your primary. However, you have 3 more units. And with 4% interest rate, or whatever the interest rate may be that the Feds drop it to next year, you're going to have 3 units that's paying you rent. That rent is going to come enough to pay your mortgage, and for you to save money, and for you to use it for maintenance. You could take each apartment, one for rent, one for maintenance, and one to save. I mean, it's got to be at some point that we look at the housing market for our advantage. We have to use a little wisdom here, especially with things coming up. We don't quite sure know what's going on fully, but we know something is coming up. Those 3 additional units can bring you in income along with your job. They count those units as income when they are qualifying you. And okay, here goes another one, a mixed use. Not every state have mixed use. A mixed use is when you have an apartment building on top and a storefront at the bottom. A lot of people want storefronts. And with a storefront that's considered a business, you get to charge more rent. See where I'm going? And most storefronts have 2 units upstairs, mixed use. They have 2 units upstairs. A lot of them do. Some of them have 4, because they have that divided. They have a storefront here and a storefront there, and then they have 2 units on each side. But either way it go, if you get a mixed use and it only have 1 unit upstairs that you can live in, you still have the storefront that you could rent out for business. You see what I'm saying? You getting where I'm going? I'm here to help you to make money, to generate wealth, and to keep going. I mean, like, to own your own home is stability. And I know what they say about owning property and all of that stuff. But think about this. You're probably paying rent of $16,000 to $2,000, depending on what state you live in. And that same rent that you paying a landlord, that's going to keep increasing your rent, and you have to wait for them to fix stuff, do things. You could go and buy your house. You can go and do a USDA loan with no money down, 0 down. And they have USDA loans that do new construction. They help you if your income is low. Not help you, but it's mainly for people that don't have a certain amount of income in certain areas. And now they have so many programs where you could get down payment assistance. You could get help with that. You could get grants. I mean, your loan officer should know how to structure your loan to help you. That's why you go in ahead of time and you all work it out and create a plan that you could say, hey, let's do this. This is my goal. I want to own this by X amount of time. That's how you really own a home. You create a plan. You have a strategy. So check this out. One of the companies, one of my lenders, they do 1% down. 1% down. Yeah, you got to have not perfect credit, but 688, I believe, and up. But 1% down still. A lot of you been working on your credit. Working to clean it, working to get it together. Don't let them rates next year drop and fool you. Because the rates drops, the housing prices is going to go up. I'm just keeping it real with you. Yes, that's what's going to happen. Buy now and refinance with the lower rates next year. Buy a cheaper house now, and then next year when the rates drop, you refinance for the lower rate. That's what you do. You heard it from me, the mortgage expert, the blessed broker.